So I want to be very clear. This video isn't here to hype you up. I'm here to tell you the brutal truth. The kind of truth that usually you only learn if you've paid for it, right? So everything I'm going to talk about today came from real pain, real losses, real mistakes, and not just theory. And some of it might be uncomfortable actually, but honestly, if trading hasn't humbled you yet, it will. So the first truth is, same process, same pain. For a long time, my trading looked like effort without progress, right? I was busy all the time. I was studying, watching charts, watching videos well late into the night. And I was convincing myself I was doing the work, but the outcome never really changed. I just keep losing money. Sometimes slowly, sometimes in really large chunks, but always enough to sort of keep me stuck. And the dangerous part is that when you're not completely blown up, you tell yourself you're close, right? You start saying things like, I just need one good month. If I can get one decent payout, everything's fine. I'm right most of the time. I just need better execution. And maybe some of that is true. But here's what I eventually had to face. If the process doesn't change, the outcome won't change. And that sounds obvious, but it's brutal when you realize how long you avoided that truth. In 2018, after repeating the same mistake for years, I finally admitted something that really hurt my pride. I couldn't do this alone. Not another video, not another indicator, not another tweak here and there. I needed actual guidance from someone who had actually lived through this. And that decision didn't make me profitable overnight, but it stopped me from blindly repeating the same cycle over and over again. And for a lot of traders, that's the real turning point. Let me tell you about the trade that really forced this realization. At the time, I had a £10,000 account, roughly. And back then, that was a lot of money for me, right? I was over leveraged massively, but I didn't see it that way at the time. I was up £5,000, the biggest trade that I've ever had, which was nearly 50% up on my account. And instead of taking profit, I got greedy. I convinced myself that the market would keep going higher. So I moved my take profit higher. The next morning, I woke up and I was in the red £4,000. And I remember the feeling very clearly. First, it was disbelief, and then it was nausea. That sick feeling in your stomach where you know you've just messed up. And I was really angry at myself because deep down, I knew I should have taken profit. I remember saying to myself, if this just comes back to break even, I swear I will close the trade. And after a full day of stressing, it actually got back to break even. And guess what? I waited now because I thought maybe another day it might go up a few hours later. The next time I checked my account, the whole account was gone. I didn't tell anyone. I knew what they was already going to say, right? I told you so. You were reckless. You should have taken profit. And the worst part is I had bills to pay. That was the moment I realized something very important. I wasn't losing because I didn't know enough. I was losing because I didn't respect risk. I didn't respect structure, and I definitely didn't respect myself. Truth number 2, intelligence doesn't transfer. This was probably the hardest truth for me to accept. You see, I did well academically. I was disciplined and I could learn very complex material, so I genuinely believed that I'd be the exception. I thought, if I understand this deeply enough, I'll figure it out faster than most people. But trading, it's not like learning a subject. You're not rewarded for how much you know. You're punished for how you behave under uncertain conditions. And trading exposes that. It exposes your impatience. It exposes your ego. It exposes the need to be right, the fear of missing out. And honestly, no exam prepares you for that. I spent years believing indicators were the solution. If I could tweak them just enough, to optimize them just enough and backtest them enough, eventually, I had to admit something uncomfortable. Indicators weren't solving my trading, no matter how many of them I tried. They were giving me the illusion of control, but price was the thing that mattered, and more importantly, how I reacted to it. Truth number 3, more learning can actually hold you back. That's right. This one was uncomfortable, especially for people who pride themselves on working hard. For a long time, I genuinely believed that the reason I wasn't profitable yet was because I hadn't learned enough. So whenever trading wasn't clicking, my solution was always the same. Learn more videos, more concepts, more notes, more screenshots. And on the surface, that sounds responsible, right? Like, well, I'm doing the right thing here. It sounds like discipline and it sounds like I am dedicated, I'm putting this work in. But what I didn't realize at the time is that learning had slowly become a way for me to avoid something, because learning feels safe. When you're learning, you're not exposed. You're not wrong yet. You're not risking money and you're not being tested. So execution is where the truth shows up. And especially with ICT, this trap is very easy to fall into because there's so much information out there, so many concepts, so many layers. You can spend years just studying market structure, liquidity, PD arrays, timeframes, all of it. And that's what I did. The irony is, the more I learned, the less time I actually spent watching live price action with intention. I felt busy, right? I felt productive. I felt like I was doing a lot of work, but my trading didn't improve. And eventually, I had to admit something to myself that I really didn't want to admit. I wasn't stuck because I didn't know enough. I was stuck because I didn't know what to ignore. That was a huge shift for me, because trading doesn't reward how much you know. It rewards how well you can act on very little information consistently and under pressure. Truth number 4, complexity is often fear wearing a lab coat. This might be one of the most important truths in the entire video. At one point in my journey, my trading process was honestly absurd. I had 3 full A4 pages of notes just to find a setup. I'm talking seasonals, COT reports, open interest, bonds, SMT, correlations. My higher time frame analysis was from the weekly chart all the way down to the 1 minute time frame, and every single PD array highlighted on every single time frame. And my charts were so covered in lines that sometimes I genuinely forget what half of them were even for. But at the time, I thought it was progress. And I think this is something that a lot of academically minded traders actually fall into, right? As an academic, more information feels like competence, right? I know more. And more complexity feels like mastery. If I can account for everything, then I can't be wrong, right? But here's the brutal truth. That complexity wasn't making me a better trader. It was protecting me from uncertainty. Because simplicity is terrifying. When you simplify, there's nowhere to hide. If you take a trade based on 3 clear reasons and it fails, you have to own that. But when you take a trade based on 15 overlapping concepts, you always have an excuse. It was right, but this one thing didn't line up. It would have worked if not for that news. Or I just needed one more confirmation. Complexity gives you this emotional cover, and trading doesn't reward emotional cover. The market doesn't care how much effort you put into your analysis. It only responds to timing, execution, and risk. That realization took me years longer than it should have done. Truth 5, you don't simplify by knowing less. You simplify by becoming selective. I want to be very clear about something here, because this often gets misunderstood. I don't regret learning all of ICT in the detail and the depth that I've learned it at. Number 1, it made me an incredibly good educator because I learned everything. And number 2, it gave me a very deep understanding on how the market behaves. The mistakes wasn't the learning. The mistakes was trying to use everything all at once. At some point, I had to ask myself a very honest question. What actually works for me? Not what sounds impressive, not what looks good on the chart, not what other people are using, but what consistently fits my temperament, my psychology, and really my ability to execute. That's when things started to change. Instead of asking, how many confirmations can I stack? I started asking, under what conditions does this actually matter? That shift led me directly to DRT, or dealing range theory. DRT wasn't created because I wanted a new model. It was created because I needed something that stopped me from trading most of the time. It forced selectivity, it forced patience, it forced me to wait until the market earned my risk. And once I accepted that not trading was the actual correct decision, my trading quality improved dramatically. Truth number 6, impulse will destroy, even good analysis. This was probably my biggest internal battle, because somebody who has ADHD, and in trading that really showed up as constant impulsiveness. It felt like being a dog chasing cars. Every candle looked important. Every price move felt like an opportunity, and every fluctuation triggered like this real urge that I need to get into the market. And here's the frustrating part, because most of the time my directional bias was right, but my execution was terrible. I'd enter too early, I'd front run setups, I'd anticipate instead of waiting. The hardest thing for me to learn wasn't my analysis. It was learning to sit on my hands and wait. Not entering early felt physically uncomfortable for me. It felt like I was missing out, right? I felt like I was being passive, like I wasn't doing my job as a trader, that I need to get into a trade. But the truth is, most traders don't lose money because they're wrong about the direction. They lose money because they can't wait. Once I started building rules and frameworks that physically prevented me from acting on impulse, everything started to change. Not because I suddenly became more disciplined, but because I removed the opportunities for myself to be undisciplined. That's the important distinction. Discipline isn't about willpower, right? It's about structure. Truth number 7, losing is inevitable, but suffering is optional. This one took me a long time to understand properly. I used to hate losing, and I don't mean in a healthy, competitive way. I mean, I'd carry that loss with me. If I lost a trade, it didn't just end there. It followed me into the next trade and the next one after that. And I'd hesitate because of it. I'd second guess myself, or I'd do the opposite and try to make it back quickly. Either way, the loss was no longer just a loss. It was influencing my behavior in every trade. And that's when I realized something important. Losses themselves aren't the problem. It's the relationship you have with those losses. At some point, I had this realization that time only exists in the present, right here, right now. The market doesn't know what happened in your last trade. It doesn't care that you're trying to get back to break even. It doesn't care that you were right yesterday. Every trade is a new moment in time, and when you drag that past into your present, you're no longer trading price. Now you're trading emotion. That was honestly the biggest shift for me, because once I stopped emotionally attaching losses to my identity, they eventually lost their power. Truth number 8, you are not supposed to win every trade. This sounds obvious, but most traders don't actually accept it. They say they do, but their behavior says otherwise. I gained real control in my trading when I fully accepted that I will not win every trade. That's not a flaw in the system. That's why stops exist. A stop isn't a failure, it's rent. It's the cost of doing business. And once I truly understand that, something really changed. Each trade became independent. A win didn't make me overconfident. A loss didn't make me fearful. It was just one outcome in the series of a lot of outcomes. That's when consistency starts becoming possible. Not because I suddenly got smarter, but because I stopped emotionally reacting to randomness. Truth number 9. If liquidity isn't engaged, you're early or you're guessing. And this one was a huge technical breakthrough for me, because markets don't move randomly. They move because there are orders that need to be filled. Smart money needs liquidity to enter or exit positions. And for a long time, I was entering trades before that process had actually played out, which meant I was either too early or I was guessing. Once I understood that liquidity needs to be engaged first, everything started to slow down, because I could actually wait for that process to happen. I stopped feeling like I had to catch every move, and I stopped trying to force a trade. Waiting for liquidity to be taken gave me the patience and the signature that I was looking for in price to allow me to sit on my hands. It also removed a lot of emotional decision making. Instead of asking, do I think price will go up or down? I started asking, has the market actually done the work required to move? Which liquidity pool has been raided, buy side or sell side? And where are the equal highs or equal lows? That shift alone saved me countless bad trades. Truth number 10, discipline on the chart starts off the chart. And this one's probably the most important truth of all, if I'm being honest. And it has nothing to do with indicators, entries, or strategies. The biggest shift in my trading didn't come from the charts. It came from being disciplined outside the charts. See, I started to notice a very clear pattern. When my life was chaotic, my trading was chaotic. When my routine was off, my execution was off. When I lacked structure outside the markets, I lacked structure in the markets. And the excuse I hear all the time, I don't have time, is the same one that I used for years. If you want this badly enough, you make time. You don't need to trade all day. You don't need to stare at the charts non-stop, but you do need consistency, routine, boundaries, because trading magnifies who you already are. If you're impulsive in life, you're going to be impulsive in your trading. If you avoid discomfort in life, you'll avoid it in the charts. Fixing trading often means fixing yourself first. So the real brutal truth. Here's the part most people don't want to hear. If you ignore everything I've said in this episode, nothing dramatic will happen. You won't blow up tomorrow. You'll just stay where you are, stuck, repeating the same patterns over and over again, making the same mistakes year after year. And that's the real danger. Trading doesn't punish you loudly. It punishes you quietly with stagnation. This will eventually click, but you can't force it. So you need to keep showing up. You need to learn from your mistakes. And when you do something dumb, because you will, don't dwell on it. Every day is another opportunity to do slightly less damage than the day before. And over time, that's how consistency is built.